Hi guys, Piotr here. This is Liteforex global YouTube channel. A lot of greens behind me today with the quite nice company, as you can see. Well, doesn't mean that all the financial assets are rising. Anyway, if you think Monday and Tuesday been busy, you have to check the calendar for Wednesday, Thursday and Friday. We are going to focus with this video on the worldwide PMI, on the CPI out of the UK and Canada, as well as the retail sales out of the US. Well, when it comes to the European PMI, market is looking for a services rebound. Also, market is looking for some kind of the continuation of the PMI manufacturing rise. Of course, the focus today, the event of the day, is going to be FOMC, but that's something we are going to cover within the next few hours in the different video. So, plenty of things to discuss. Without the further delay, let's jump straight and see you inside. So, UK inflation overall much weaker what market was expecting. The CPI year to year 0.3 versus 0.6, the previous one 0.7. Core CPI 1.1, expectations 1.4, previous 1.5, but pound it's not slowing down. Well, with the light in the tunnel, which been turned off quite a few times in relation to the Brexit. We are going to make a few charts, but not dollar related. So guys, why? Because we are going to have specifically the video about the dollar ahead of the FOMC. So let's start with Euro Pound. After the gap to the downside at the very beginning of the week, we closed that gap yesterday. I thought, if you do remember, I thought that maybe 91.90, 92.20, that's where I'm going to expect some sellers. The sellers appear exactly on the gap, so unfortunately I missed that short opportunity. Where for the Euro Pound from here? Well, we are expecting, we are awaiting European PMI and UK PMI as well. The European PMI services, the market is expecting some kind of the rebound. If that's not going to materialize, or if it's going to be in line, we might see continuation to the downside, because then the market will expect quite good numbers from UK. Both manufacturing services above 50, especially the services, are important, and market is expecting rebound from 47 ish to above 50. So I do expect lower levels, and where we were discussing 90.20, 89.90, that's how I see the things here. And then we have again things related to the Bank of England. We are going to discuss with another video. So busy week. How I'm going to approach this? All right, that's the Asian consolidation here, right? We already falling, and that's not the great thing. I've been thinking of retest of these levels, right? So I've been expecting like the market may try to double the Tokyo range to the upside and then move to the downside. So for now, if that's gonna materialize, right, we might have the failure here, right? Let's say we might have a failure, and next hour is going to bring us higher. Then retest of the weekly open, maybe a little bit higher, and then only then the failure around the retest of weekly open. That could be for today for me a short setup, and with the possible 1-to-1 move, equal move to the downside, I would expect some retest of 90 and a little bit below 90. So I do expect that these lows, the stops below, are gonna be targeted when it comes to the pound versus euro. The next pound chart is the pound yen, and we are, even with the very strong pound, we cannot move much higher for now, mostly because of what is going on with the dollar yen, right? So market on that cross is still below 140. Here we have a combination of this UK data, Bank of England and Bank of Japan. Why not? Of course, while below 140, lower levels may to come, but what we have to remember is the weekly open, and I wouldn't go short here as long as we are above weekly open. All right, I wouldn't go short as long as we are above. Only move below 139 could spur some action to the downside. So what's gonna be my approach? If we are going to see the pullback towards this latest weakness from Friday, right, and this possible over under, so we are talking about the levels related to the weekly open, right? If we are going to see attack on 139, maybe 38.70ish, all right, that's where I'm going to try to look for the buying opportunity. If we are going to fail here, right, and we are going to move lower from here, okay, the gap close could be the case, but then any attempt to get back above the weekly open could be the selling opportunity. So as of now, I'm looking to buy a little bit shy below 39 in case of the price action because of this latest weakness. But if we are going to break through and break this over under, closing the gap, I'm going to look for retest of the weekly open and then selling opportunity. That's how I see the things when it comes to the pound yen. But it's also, as I mentioned, Canadian data. So in that case, let's have a look what we have when it comes to the CAD yen. CAD yen. Well, again, very similar situation to what we have when it comes to the pound. CAD dollar itself is very strong, but Canadian yen cannot push much higher from current levels, and even more right now. As you can see, we are breaking through the weekly open, and I'm going to watch very carefully the development related to the Thursday range, because if we are going to get back below 81.20, 81, right, we are immediately opening 80.50. okay, so that could be the case. So if we are going to break through that level, I'm going to look for some kind of the bullish activity, bullish activity as long as we are above. But if we are going to break through 81.20, 81, I'm going to look for bearish activity, at least with the first target around 80.50. So the range we've seen on the 10th of December, right, is a key here. So I'm looking for the price action around the current level. If on the smaller time frame I'm going to get the positive price action, I may want to try to trade with the retest of 82. But in case of the breakdown, I may switch to the short side. Overall, 81.20, 81 as a line in the sand for a CAD yen. And the last one is Aussie Canadian. Aussie Canadian, here we go again, right? Boom. Here we go again. So what I'm gonna to look for, taking into the consideration all the problems, both are commodity currencies, right? No doubt about it. So it might be easier to trade. We are retesting weekly open, right? We are retesting weekly open. We do have some kind of the supply above these levels, right? So the first approach is to look for the selling opportunity or any kind of the failure around the current level, all right? And the second, to wait for the Canadian data, eventually see the spike and rejection as a second option to try to short it Aussie CAD. Taking into the consideration these two, I'm in favor of Canadian dollar, at least for retest of 94.20, 94, if not lower levels down towards 92.20, 92. So with that being said, guys, don't be trapped during the early hours of the European session, and as I promised, I'm going to get back to you with the pre-FOMC dollar charts update. See you around.